Blue Chip Bulletin. Financial market updates and insights.
You know, when we talk about the AI revolution, our minds usually jump to the big names creating the actual AI models. But have you ever wondered about the superhighways that all that data travels on? Well, that's exactly where Marvell Technology comes in. Their latest earnings report, it's not just a bunch of numbers. It's a direct signal on the health of the entire AI infrastructure boom. And trust me, the numbers are telling a very powerful story.
Right out of the gate, Marvell CEO Matt Murphy pretty much lays out the whole story for us. A record year, huge growth, and one very clear reason behind it all: the absolutely massive demand for artificial intelligence. This one quote really kicks everything off.
So let's start with the big headline number for the fourth quarter: a record-smashing $2.2 billion in revenue. I mean, this isn't just a good quarter, it's a huge signal that the demand for their core tech is really heating up.
And when we zoom out and look at the whole year, we see this incredible 42% jump in revenue. For a multi-billion-dollar company in this space, that kind of growth is just phenomenal. It's solid proof that the big bets they made on AI are paying off.
And it's not just about revenue, right? This growth is flowing straight to the bottom line. Marvell hit 80 cents per share in non-GAAP earnings, which beat what the analysts were expecting. This shows they're not just growing, they're growing efficiently and profitably.
So here's what we're going to cover in this explainer. We just saw the headline numbers. Next, we'll dive into their big pivot to AI. Take a look under the hood at the balance sheet, check out their plan for future growth, and finally, look at the big picture from an investor's point of view.
So how in the world has Marvell pulled this off? Honestly, the best way to think about them is as the master plumbers of the AI revolution, right? They don't build the flashy AI models you hear about. They build the critical, high-speed pipes and connections behind the scenes that make it all possible.
So what is this plumbing we're talking about? It really comes down to two key things: custom-built chips designed for specific AI jobs, and these incredibly fast optical interconnects. These things use light to move just oceans of data between servers at breathtaking speeds. Bottom line, without them, AI data centers simply would not work. Period.
Now, getting to this point wasn't some happy accident. It was a really smart, multi-year strategic move. As the AI boom really caught fire in 2024, Marvell hit the gas on shifting away from its older businesses. By 2025, they were buying key companies like Celestial AI and cranking up production of custom chips for the biggest names in the cloud, like Amazon and Microsoft.
And here you can see the absolutely stunning result of that pivot. The data center business, which is almost all driven by AI and cloud, now makes up a whopping 75% of Marvell's total revenue. All those other markets they used to focus on, they've become a much smaller piece of the pie as Marvell pours all its energy into this huge AI opportunity. And if you want to get a sense of just how fast this all happened, just look at the year-over-year growth. In only 12 months, their data center revenue shot up by 78%. That's not just growth, that's like a rocket ship taking off. Marvell is perfectly positioned to ride this wave.
Okay, a fantastic growth story is one thing, but is it actually sustainable? To answer that, we need to pop the hood and take a look at the balance sheet. This is where you see the real financial strength that's supporting all this crazy expansion. Two numbers immediately jump off the page here. First, cash on hand has just skyrocketed by 178% to over $2.6 billion. That is a massive war chest. Second, inventories are up by a pretty big 35%. Now, for a lot of companies, rising inventory can be a bit of a warning sign. And this brings us to a really key question for investors. Is this inventory a sign of trouble, or is it a sign of strength? The worry is that it could mean demand is slowing down. But Marvell's story is that this inventory is totally strategic. They say it's being built up on purpose to support the record number of new contracts they've already signed, which are all set to ramp up in the next year.
This whole thing really highlights how disciplined they are with their money. First, they sold off their slower growth automotive business, which brought in a ton of cash. Then, they used that cash to buy key AI technologies and at the same time returned $1 billion to shareholders. It's a textbook example of focusing your firepower on the biggest opportunity. So all of this brings us to the future. They've got a strong balance sheet, they have a clear focus, so what's Marvell's blueprint for keeping this incredible run going? Well, it's all about locking down the future business pipeline.
And again, the CEO's own words point us to the answer. The key to Marvell's future is this concept of design wins. They just hit an all-time record for these, and this is the engine that's going to power their growth for years. So what on earth is a design win? Think of it like this. It's when Marvell is chosen as the official supplier for a really critical chip in a customer's upcoming product, like a next-generation server for a cloud company. It's basically a long-term contract that locks in future revenue and makes Marvell's tech a core part of their customers' future plans.
These design wins are happening across several really important areas. The custom chips for the cloud giants get all the headlines. But just as important is the tech they got from their recent acquisitions. Celestial AI brings tech that lets chips talk to each other using light, which is way faster and more efficient. And XConn Technologies brings a new standard called CXL that lets all the different parts of a server share resources better. This is the stuff that's enabling the next big leap in AI performance.
And you can see the company's confidence reflected right in its guidance. After just posting a record $2.2 billion quarter, they're forecasting an even bigger one to start the new year, at $2.4 billion. That is not a company that sees a slowdown coming.
So this all leads us to the final and most important question for any investor. How do you weigh the short-term noise of the market against a company's long-term strategic vision?
This is really the core debate. In the short term, the stock can be volatile. It's got a high valuation, and investors are watching profit margins like a hawk. But on the other side, you have the long-term story, a fortress of locked-in design wins, and an absolutely essential role in the AI market, which is still in the very early days of a multi-decade expansion.
So, where does Wall Street come down on all this? Well, the general feeling remains positive. Despite any short-term jitters, most analysts see the stock as trading near its fair value, and they're keeping a long-term buy rating on it. Why? Because they believe the company's strategic position as the plumbing for AI is more important than any immediate market worries.
And that leaves us with the ultimate question. Is an investment in Marvell a bet on how they do in the next 90 days? Or is it an investment in the essential infrastructure that's going to power the AI industry for the next decade? The way you answer that question really defines your entire investment horizon.